Good afternoon. I am Manju Ganariwala, co-chair of FAF's Standard Setting Process Oversight Committee, along with fellow trustee Lara Ebresh, who unfortunately cannot be with us here today. I'd like to welcome all our stakeholders observing today's meeting. Before we move to our meeting agenda, I want to remind everyone of our due process correspondence procedure and form, both of which can be found on the FAF website. And as previously expressed, these measures are meant to make it easier for stakeholders to raise potential concerns about compliance with the due process procedures of the FASB and GASB. Also, I want to direct our listeners to the agenda and meeting materials for this session. You can find these on the FAF website under the Meeting and Events Calendar subsection. Now, moving on to today's meeting agenda, the committee will cover the following items: GASB Report, FASB Report, FASB Liaison to the PCC Report, PCC Meeting Observations Report, and other meeting observation reports. And I'll begin with our first topic, GASB Report, and turn it over to Joel Black. Chair Black.
Thanks, Manju. Very excited to be with all of you today. Good to see all the committee members. And we are going to walk through what we did during the fourth quarter at the GASB. I'll start you on master page 67, which shows the highlights. This is the quarter in a nutshell for us. In the interest of time, we're going to talk about each of these things kind of in turn in more detail. So I will move on to master page 69, which rolls forward the activity for the quarter. You'll see that we added 2 items. One is a new type of project for us, the technology project, which is really our taxonomy work that we've been talking to you about for some time. And I'll talk about that a little bit more in a few slides. And then pre-agenda research-wise, we did add cybersecurity risk disclosures to pre-agenda research. Alan will talk about that in just a bit. We did issue 2 due process documents during the quarter, which Alan will also talk through. When you see this next quarter, I would expect, as you will hear later in this presentation, a couple of items to come off, and 1 PAR that we completed will probably roll off, and our other research item on gap utilization will probably roll off by the time you see this next quarter. So moving to page 70, you see our comprehensive or conceptual projects. These are our largest projects. We have 1 currently on our technical agenda, the revenue and expense recognition project. We do have some new committee members and trustees. This project we normally classify as red or green, or at risk would be yellow, as to whether it's within our kind of benchmark time frame. And this project got off really slowly. We had some personnel issues many years ago, and it's an important project. And so while we have tried to catch up, we really want to make sure we take our time and get this project right. So it will likely not be issued within our 7 to 9 year benchmark for this project overall, but we are continuing to make good progress on this project. In particular, during this quarter, we spent time talking about performance obligations and identifying when performance obligations are satisfied, largely building on the FASB's Topic 606 literature and moving that forward towards decisions. I would expect us to have an exposure draft of the standard still as scheduled in 2026. Moving to the next slide is our major projects, not quite as big as the comprehensive, but still of significance. We have 2 on our agenda currently. The infrastructure assets project, at the very end of the third quarter, we issued a preliminary views document, the first of 2 likely due process documents for this project. We had an over 100, probably more like 110-day comment period on that ended January 17th, 2025. We did receive at this point 65 comment letters. The slide says over 60. We have ended up at 65. We'll probably have more details for you on this at the next meeting, but I'll note of the 65, 32 were from preparers, 22 were from auditors or audit organizations, and then 11 were from users or others. That's a pretty good number of user comments for a project like this. This is an important project. We're doing it because the users asked for better information about infrastructure assets. So we really tried to push for users to respond and give us their thoughts here. From the comment letters, we are in the midst of performing public hearings in which commenters that wanted to elaborate with us and dialogue with the board about their comment letters have agreed to come and dialogue with us. We've had 2 such public hearings over the last couple of weeks, and we have 1 more scheduled for later this week, as well as a user forum scheduled for later this week. In those 3 public hearings, 17 different groups will be represented and come and talk to the board about their thoughts. And the user forum will have 4 to 6 different users participate with us. And we go around and kind of have some dialogue and get them to give us feedback on the proposals in the infrastructure project. The second of our major projects is in a similar time frame, but a few months behind. That's our going concern, uncertainty, and severe financial stress project. The board is scheduled to vote on issuing a preliminary views document, again, the first of probably 2 rounds of due process here at our March meeting this year. Of note here, the most recent decisions, if you remember back in our going concern project, what we're really trying to do here is look at going concern as a concept specifically in the government environment, where going concern is largely defined as ceasing to exist, most likely the dissolution being caused by some type of financial stress. Governments often can't cease to legally exist, can't legally declare bankruptcy. So does that idea of going concern make sense in our environment? So the board's preliminary views, which we will again hopefully approve in our March meeting, separates those 2 concepts, going concern from severe financial stress. They're 2 concerns that may be related, but aren't necessarily related. And of note, during the 4th quarter, as we progressed on this project, the board did vote to, in the preliminary views document, change the terminology for going concern, uncertainty, meaning cease to exist as the same legal entity, away from talking about it as going concern and calling it probable dissolution. That would be a pretty big change from existing literature. And so it will be interesting to see what feedback we get once we release a preliminary views document. So I meant to, before we go into practice issues project, if you guys have questions throughout, certainly you're welcome to stop us at any point in time. But if I don't see any quite yet, and we'll take them at the end too. Go ahead. Yeah, Rick.
Just one question, and actually just interesting because we do have some new trustees, is the time frame, the benchmark ranges between the different projects. I think that's interesting for us to be reminded of how those differ.
Yeah, and that's primarily why we kind of differentiate the sizes, right? A comprehensive project, the benchmark is 7 to 9 years. I would guess when revenue and expense comes to the end, it will probably be at about 11 years. It will have taken us to get through that one. The major projects is 4 to 6 years. I think both of these infrastructure assets and going concern projects will be 4 to 5 years when we're done. If we agree, we're progressing really well for them. And then the projects Alan is about to talk about are 0 to 2 years. They're smaller practice issue projects, but yeah. Thank you. So Alan, we'll talk about now our smaller practice issue projects.
Yeah, they tend to, Rick, be also about size, complexity, and to a certain extent, also related to the number of due process rounds we're going to have, right? If you go to an revenue expense recognition, we had an invitation to comment, followed by preliminary reviews, followed by an exposure draft, then the final. These smaller ones, the practice issues, they go straight to typically an exposure draft and then the final. And both the topics on this page are, the subsequent event topic was really about, I use the word clarification. If I ask people what a subsequent event is, most people in this room would say, yeah, it's something that happened between your end and the day you issued your statements, right? So for government, issuing debt would be an obvious example of that. And if I told you we did some research that said governments 30% of the time didn't disclose that, then we need to clarify the words, because that would be stuff we would think that would have shown up as a subsequent event. And so we're doing that to really clarify the words. Exposure draft was already out. The comment period ended last Friday. We're now working through getting the comment letters and bringing that back to the board to redeliberate that with a hope and a plan to have that issued as final by the end of 2025. That's really about clarifying, hence the practice issue. The other topic on here is our implementation guide update. And this is one thing that we as a GASB still do, that we issue what we call implementation guides. They're Q&As. They are literally a question with a given answer. They're very narrowly focused a lot of times on a very specific facts and circumstance with a very specific answer to that facts and circumstance. With that said, it is authoritative. So it is GAAP. So we do these periodically from between 2015 to 2021, we were doing them annually. pensions, OPEB, speed, leases, speedas, lots of reasons for that. We've gotten to a cadence now, we're doing them every other year. There's no designed cadence to that. It doesn't have to be every year. It doesn't be every other year. It's when we need to. So we're going to do one of those this year. We should have that done by hopefully June, about June of this year. There's 21 questions in there. We had a comment period that ended January of 2025. I think we got good comments. We got good feedback. We got a variety of feedback. Not everybody agrees with every question and answer. That's normal. I can tell you right now, and this is why feedback matters, we're going to propose to the board at the board meeting in March some revisions to those answers. But that's the point of the feedback, is to say, hey, the answer could be clarified if we did A, B, or C, and you're going to see the board will see some clarifications to some of those answers. But that's the purpose of the due process. And so we will go through all 21 questions with the board at the March meeting with the hope of having that one final in June. Yes, sir.
And I'll be quick on this. So when you do a comprehensive guide, Alan, so is that where you take multiple implementation guides that are something and put them in and does that supersede the others?
Yeah, when you're talking about, we have what Rick's referring to is we have a comprehensive implementation guide. That's just an aggregation of all the other implementation guides. So it's like, we could have an implementation guide. We had it with pensions where it's just an implementation guide around a specific standard. We just issue a guide on the pension literature, or we can do them periodically and do them annually where we combine, like in this one, you have lease questions, SPIDA questions, State 100 questions, Comp Abs questions. So typically an implementation guide has multiple different topics. And those, when we issue a guide like 2025-1, which is what this will be called, it rolls into the comprehensive implementation guide, which rolls into the COD. And so it's an aggregation.
Thanks, Alan. Moving on to the next project, which is discussed on page 73 of your materials. This is our new technology project. And this was born out of, we had a monitoring activity for a long time within our technical plan for electronic financial reporting. And when I came to the board 5 years ago, it was important to me that we devote time to understanding how technology was changing the way in which governments prepare the reports and the way that financial information is consumed by users. What that evolved into, as we've discussed over the last couple of years, was that on the user side, that information was changing, that there are still users who manually extract information from the PDF and input it into their systems, but there also is this wave of more scraping of technology, of using technology to extract information from those PDFs and populate user systems for their analysis purposes. And instead of somebody else kind of deciding what are the important items of information in the financial report to extract or to have kind of presented in this more digital way, we decided it was important for us to start a project and create our own, what we called and often referred to as our taxonomy, that is not an addition to GAP, but it rather builds on GAP and uses GAP for governments that want to, and for technology solutions that want to use a GASB-based taxonomy or digital data structure, they would have that available to them. And so we did it within that monitoring activity. We were kind of getting our feet under us, making sure we, had a good, clear path forward. We knew what we were going to do it. We had the capability to do it. And the board finally in the fourth quarter reached the point that we think we're making good progress. We've really got a good architecture. We think we've got a good foundation. We have a path forward for us to break it out, but we didn't have anything to break it out to, because it isn't going to be GASB 100 and whatever. So it isn't an accounting or financial reporting project. It isn't a GAP standard setting project, but it also isn't research. This will probably be ongoing for us to maintain this taxonomy in the future. So we called it a technology project, and its official name is Voluntary Digital Financial Reporting. So it's doing just that for a government technology solution, whatever, that wants to report government financial information in a more digitized way. This data standard, for lack of a better term, will give them the structure using our GAP to build on that. And so we've actually made really good progress as we were kind of getting our feet under us. We are beginning the process of forming a consultative group. We've hired experts, or we've hired one in particular expert that's helped us in this period. We've assigned some of our current staff to working on this technology or taxonomy. We've used input external sources and resources of information to help us along the way, including our friends at the FASB across the hall. But we wanted to more formalize that group. And so we are right now forming what we'll call a consultative group, like a task force that will be a group of 20 to 25 external parties that the team will be able to access in routine, in a routine way to get input on the decisions they're making, the taxonomy as it progresses. And we also have a plan to issue a first due process document in the fourth quarter of this year that won't be the whole taxonomy, but it will be the full architecture. And there will be some sections of the taxonomy from different parts of the statements that we will then put out and begin to get even more broad external input into the progress that we're making on that important project. Stemming from that, informing that consultative group and reviewing our kind of current rules of procedure and how that consultative group would be formed and writing a charter for that group. And we consulted with our general counsel. We felt like our current rules of procedure weren't as clear as they could be about when those meetings of task forces or consultative groups are public, which is when they meet with the board, or when they can be private, which is when they meet with the staff. And so there are some tweaks that the board approved at our last meeting 2 weeks ago to the rules of procedure that I wanted to share with you. They're shared with you in the materials a little bit later. They're in red line, so there aren't a lot of changes. You have to kind of search more towards the back to see them, but it's really just clarifying when those consultative groups need to meet in public, and that is anytime that they meet with the board as a whole. So that's kind of work we're doing on that project. If anybody has any questions on that before we proceed.
You go ahead.
Thank you, Manju. Just a question on the consultative group, the current group. I mean, the makeup, the general, is it preparers, tech people, users, all the above?
Yes.
Yeah.
We've pretty evenly split a design for preparers, auditors, and users, which are our typical stakeholder groups. And we've added a fourth group of like technologists, data people to that group as well. So it's pretty evenly split among those different types of groups. But certainly the technology people, the data people are somewhat new to us, but important because of what this project is.
Got it. Thank you.
Thanks.
June, my question was, how similar or not so similar is this project going to be with what SEC is tasked with the financial data under the Financial Data Transparency Act coming out with digital reporting? So is this like the early version of what that might look like when SEC and other federal agencies get to that point, or?
So we don't know what the SEC will ultimately determine is applicable, what information submitted to the MSRB is the Financial Data Transparency Act applicable to. The SEC will make that determination. Financial reports are an item of information. Annual financial reports are an item of information that's commonly submitted to the MSRB under continuing disclosure agreements, as you know. And this is our version of this could be used by the SEC to help. If they choose to have those annual financial reports be subject to it, they could use this if they wanted to. We have been updating them on our progress up to date. And in fact, we have a meeting scheduled with them in March to update them on our latest progress on the taxonomy. They've been interested and engaged with us, but we will see ultimately what they choose to do.
Thank you.
All right, Alan?
We're going to talk a little bit about some pre-agenda research activities we have. And I guess the important point, I think, before I even get into the first topic is it's important to note that just because we research it doesn't mean it will ever become a project. And a standard setting project for us is a very different conversation than research. And so I say that because the very first topic on here, cybersecurity risk disclosures, is something where people go, you mean you're going to make a standard on that? No, we're researching it. Really, the question right now is, what disclosures are required now? What disclosures governments are currently doing? And really, more importantly, what guidance could we do if we were going to do some? We might get to the end of this project and realize there's not a path forward and there's not going to be a standard setting project. But when you talk to GASB would tell you this is in the top 5 things that they think we should be looking at. And so the way to look at it is do it as pre-agenda research. It doesn't say we're going to have a project. It just says we're going to go look. And that's all we're doing. That's all we're doing now is going to look. And so We will bring back to the board and tell the board what we found, and then they can decide whether we go forward or not. But it could be that this ends up being one where we don't go forward. It comes pre into research and never goes anywhere else. The second one on there is revenue and expense recognition note disclosures. It's interesting because when we're doing the revenue expense recognition project, which is largely based on, to a certain extent, has a large element of 606 in it. That product never really thought about note disclosures. Yet those folks that have, in the 606 world know there are note disclosures within topic 606. So it became apparent to us to go, maybe we need to think about disclosure related revenue expense recognition, just like they did in 606. But there's two ways to approach that. We could just amend the current scope of that project, or we could say, you know what, stop. Let's do pre-agenda research on that topic. Talk about what notes there could be, what users might want in those notes, how those notes might be essential, and then take that to the board as a project. We thought the more transparent way to do it is this way. Take it through pre-agenda research, talk about what that might be in it, what might be in that project, and then if the research says we should have the product, then we can amend it and have the product to standard setting. We thought there was a better path forward. Again, doesn't mean there will be a project on the note disclosures, but it made sense to go down that path since a lot of folks in this room know there are disclosures related to 606, and we need to be thinking about that. The third topic on here is gap structure. We're probably one of the few, if not only standard setting bodies, who right now, even currently today, has multiple levels of gap. We have level A stuff, which is issued by the board, which is authoritative. We actually have what we call level B, which is a gap, which is also issued by staff, issued by me, that's also authoritative. That's unique. This gap structure product we're doing is really asking the question of why, and does that make sense, and should we change? It's really asking the question, should we go to a single source of authoritative literature, go to a COD like the FASB has, and what's the pros and cons, good and bad of that, and if we should change, why should we change? Again, doesn't mean that we will. I think there'll probably be changes at some level no matter what, but it doesn't mean that'll be totally what FASB does. But it seems like the right thing to do is ask, we're different, why are we different, should we stay different? And so that's really what that product's really trying to do. The last product on here is called gap utilization, and we've talked about that before, and that's really about us asking this question about which state and local entities actually use gap. And this number gets thrown out a lot. There's 90,000 state and local government entities in the US. Well, we probably know that all 90,000 probably don't use gap. The question is, how many do? The last time we did this in 2008, it was very binary. Does the state require it, yes or no? Well, the reality is there's a lot in between that. There's states that say you don't have to do it, but then a lot of the city governments do it. There's states that say you don't have to, but you do something very close to it. So what this product was trying to do is get to that gradation, if you will, between yes or no. It took a lot of time to do that, but I think it's important for us to know that, to know what the answer is. The report is being finalized. You should have it in May. I think some of the upside is we can tell you that 100% of the states do use it, and probably based on size and complexity of the government, it will go from all states using it to grading out to be the smaller government, the smaller size, where the government's in the market, let's say, in the debt market or not, the percentage might get lower. But we'll have that report to you in May, and I think it's a really good exercise for us to go through, because it's really important to know how you can answer that question when someone says, how many people actually follow gap? So I'll stop there unless there's any questions. No? Keep going. Last topic for me was just on PIR and PR activities. You have in your packet a PR report on Statement 72 and fair value. We're going to plan on putting that report out and issuing that report once this meeting is over. We continue to work on the other three we have, OPEB, fiduciary, and leases. They're on schedule and they're on track, and they're following their timeline.
That's our report, but we're happy to answer any remaining questions anybody has. I know we answered some as we went along.
I don't see any. So
Thank you.
thank you, Joel and Ann. We'll move on with the next report. I'll call on FASB Chair Rich Jones to brief the committee.
Great. Thank you, Manju, and good afternoon, everyone. It's great to be here with you today. Jack Day and I will spend the next half an hour or so walking you through the activities of the FASB in the fourth quarter of this year. Maybe to start, I'd like to give an update on the progress we've made on investor priorities that we heard as part of the 22 agenda outreach or 21 agenda outreach. And while we do get agenda requests and suggestions to improve financial and accounting reporting from all stakeholders, we have separately tracked these items and communicated them with the committee in the past and thought it's a good time to provide an update. Of the 7 top priorities that we heard from investors, 3 of them have progressed to final standards. That's accounting for digital assets, income tax disclosures, and disaggregation of financial reporting information. We've issued exposure drafts on accounting for environmental credits and accounting for software. We've issued invitations to comment on accounting for intangible assets and financial KPIs. And then the final item, the statement of cash flows, is on both our technical and our research agenda. The project on our technical agenda is exploring ways to improve the statement of cash flows for financial institutions. Effectively, what's the best way to portray cash flows for an entity whose business is cash? And the broader topic of the statement of cash flows remains on our research agenda as we explore different potential paths that we could consider and do outreach with stakeholders to understand, is there a project there that the FASB should pursue? If you flip to the next slide, slide 124 in your materials, this summarizes the roll forward of our technical agenda in the fourth quarter of 2024. And you'll notice that we completed 2 projects, moved to final standards, and 7 projects we issued EDs. That is a significant amount of activity. Jack's going to walk you through the details here in a moment, but a couple things that I wanted to emphasize. For us to be successful as standard setters, we really rely on input from stakeholders. For our standards to be successful, they have to be able to be applied by accountants, audited by auditors, and provide relevant financial information to investors in a reasonable cost-benefit equation. So by putting out this information, we made a decision it was better to put this in the hands of our stakeholders and alter the comment periods so that they were in many cases elongated so that all of our stakeholders could participate in the comment process. That was a choice. We decided to go with longer comment periods and get them in the hands of our stakeholders versus holding them back and issuing them at later dates with shorter comment periods. We continued to do outreach with our stakeholders, though, making sure that they can participate in our process, whether that's formal comment letters, whether it's a quick phone call with some of our board members or our teams that are supporting our board to make sure that we get that input. And I do want to emphasize that. Jack, over to you.
All right, we move on to, thank you. If we move on to slide 125, before I get started, I'm going to tell you that we're going to see several slides that are all going to look very similar, just like this. Couple things to point out. One, each one will have a different background. I'm going to kind of tell you what the story is each time. Second of all, there's a lot of outreach instances. So on this first slide, you'll see that we touched 355 stakeholders in this project. And I'd like to have you focus your attention on that. I think you'll be circa 750 by the time we're done if you keep tabs. So with that as a background, the first one we issued in the fourth quarter is the final standard on disaggregated income statement, or so-called DICE. This was 20 years in the making, and this was part of an investor package that goes along with income tax disclosures and segments previously issued. Very important document to the investor group. Now, as you can imagine, if you disaggregate a lot of information, it's going to come with some effort and therefore some cost. We work closely with preparers. You can see that we talked to over 200 to identify what the most difficult points were, and then to reconcile back and forth with investors to find some common ground and to make this as smooth as possible. The next topic that we mentioned on slide 126 is induced conversions. And this is a combination of maintenance and also emerging transactions. Since this guidance was initially issued, there is an instrument out there called a cash convertible instrument that's become pretty widespread. And people wanted to make sure, our stakeholders wanted to make sure, how is it we account for this? We said follow basically the same model, and there was no underlying change to the outcome of or the model of how induced conversions work. So that is an instance of keeping our caught up to date.
Hey, Jack, maybe before we leave the slide, just for the trustees, You'll notice on induced conversion, there's less user input than there was on DICE. And part of the reason for that is we weren't looking to change the outcome. We weren't hearing complaints from users about the outcome. But what we were hearing was concerns from practitioners and preparers on how they get to the outcome. And so this was really eliminating some of the challenges in that process and in that accounting model. So it wasn't driven on attempting to change the information. So you'll see these in some cases, there's different groups that participate more in the process or not. Very often it's because of the nature of the standard setting we're doing. Gotcha.
And if we move to slide 127 on software, you'll see that same phenomenon again. This again was a bit of a journey. The reason that we took that project on is because of the fact that people were saying the model is outdated. It deals with old cliff development of software, and software now is developed on an agile basis. That is incremental along the way. And oh, by the way, you got two models there. Why not fix this up a bit? So off the board went to address agile software and to eliminate the two models. They ended up keeping the two models after they did get some pushback about how complicated it was going to be and do we really need it. So the board went back and talked to investors with the support of the staff, and investors told us, one, it was okay to have two models. Two, they didn't want to see a significant amount more capitalization. And three, they were interested in investment spend. All right, so what does that mean to the project? That meant that it ended up being targeted improvements or tweaks to the current model, figured out how to address agile software. And oh, by the way, there's also an incremental cash flow disclosure required to address some of the spend questions. So,
quick question. How do you decide how many outreaches to have? Obviously, the number of outreaches and stakeholders varies quite a lot issue by issue, as we're seeing here. How do you decide what's the right number in any given case?
I think that's a matter of judgment, one. Second of all, it's a matter of response. We make public our documents. We have a media campaign to say that they're out there. And when people, respond, many of those touches come from their responses, and then we go from there. If we don't understand things, we'll talk about it more. The longer the project goes on, the more it circulates around our advisory groups and the more time. So it's a little bit kind of an evolution on its own, takes on a life of its own. It's a little bit judgment and a little bit interest. But what we focus on is figuring out what we think the issues are, finding common ground, and whatever it takes to do that, we'll spend. So takes us to 128. It's got a big fancy name, but what it is, it's reverse acquisitions for VIEs, if you think of it that way. That's when a classic example is you have a SPAC and you have a business that the SPAC acquires, and the SPAC business it may acquire may be sitting in a VIE. Really, who's bought who? The retaining or the ongoing business is what was purchased by the SPAC, and so therefore that should be the financial statement focus. That's one way. We see this a lot in Up-C transactions for real estate and a wide variety of partnerships. This is something that came out of evoluting GAAP, where there ended up being a conflicts, and this is a little bit of a maintenance project. This also came out of our reconstituted EITF. This was brought to us by practitioners as a practice issue that they were dealing with. It went to the EITF. It was kind of a one and done meeting, so to speak, and then went on to the board, and it's working its way through the process. Actually, we have a board meeting coming up next week, hopefully to finalize it and send it to production if it goes well. So in less than a year, which may sound like a long time, but you think about it, EITF has to meet, they have to expose it, it's got to go to board, or got to go to board endorsement, it's got to go out for exposure, usually 30 to 60 days, got to analyze the comments, then go to the board, then we have our various reviews that we have to go through and the production process because, it has to be accurate. All right, page 129, interim. This is another maintenance project that came about in part, I think it came up through the 21 agenda consultation. Yeah, I'm correcting myself. Remember, 7 months. And so in any event, there's two things about this. One, it's going to make a list of what are the required disclosures in GAAP, and those have evolved over time, all the way back to standard setters that predate the FASB, and they've all been stuck in the codification. So we went through and inventoried them all. There's some language around there, various language, what applies to interim, what not, sorted that out, and reinserted a principle that used to exist in the SEC guidance and got eliminated, that the whole idea of interim reporting is to update the annual reporting. So that's the proposal. It's out for exposure right now, and we're look forward to hearing comments back. So, Rich, you look like you want to add something in there.
No, I guess the one thing I'd add on this is we talked a little earlier today. We have a comprehensive single set of accounting standards, our codification, that was put together by pulling in all multiple pieces of FASB guidance, original pronouncements, AICPA guidance, other guidance, all into one integrated set of standards. In a way, this is almost phase 2 of that, because while that was pulled together, it wasn't always clear in some of the historical standards whether something was required to be disclosed on an annual or an interim basis. And so our team spent a lot of time going back through the original standards to say, did the board intend this to be an annual requirement, an interim requirement, or was it solely captured by that principle that Jack referred to, related to as an update of the annual financial statements? So I view it almost as a phase 2 of the codification project, one that I'm looking forward to completing. We've gotten a lot of input from people here, but it's not intended to change interim reporting. It's really intended to clarify our guidance and what is required. Jackson?
That brings us to slide 130 in government grants. That's a place where we actually had kind of a gap in gap. That quote goes to Rich, stealing his thunder. So how we ended up on that, we put out a proposal that leverages international guidance that already exists. It's called IS-20. And the reason that we're leveraging that is because it was used by most of practice. First of all, there were other types of guidance that they were using too. This puts everybody on one set of guidance, all right? And then it had some areas where it needed to be tweaked. We recommended some tweaks to that. We also added on the disclosure regime that exists in US GAAP, and it should reduce diversity in practice. It has a little bit of optionality in it that we didn't completely eliminate. We left that in there because there are different points of view, but that would be highlighted with an accounting policy choice. So move on to 131. This comes from our PCC. This relates to CECL and with regard to trade AR. The whole background on CECL, for those that aren't familiar, is that it requires you to estimate expected future losses. The thing about trade AR is normally it is a few days before trade AR is collected. Sometimes whatever your cycle is, sometimes could be up to a year, but normally it's very short term, a few days. So there isn't a long ways to look out, right? And this provides some practical expedience, including looking at cash that's been received by the time the financial statements are issued, because that's the best indication of whether or not there's going to be future losses, is if you actually collected it. That also ties into the fact that private companies issue their statements later, so there's a bigger time period. And this is for what we call non-PBEs, which is non-public benefit entities, which all practical purposes is private companies. So 132 is environmental credits, which we've brought up before in meetings with this group. This is, addressing the environmental credits that people are trading now. and also obligations that some companies may have to governments. And so this puts out a standard that addresses those different aspects. This is where policy meets accounting to some extent, because sometimes people want us to take on additional aspects into this type of accounting. But what we're talking about here is somebody spends money or has an obligation, they owe somebody money related to their environmental activities, credits. That's what goes into the financial statements.
And this is probably, similar to the cryptocurrency accounting standard that we proposed. It's an issue that we're seeing. There's transactions occurring today. People are expending funds when they're purchasing voluntary environmental credits. They're often expending funds when they're acquiring environmental credits that have to be surrendered to a government to satisfy an environmental credit obligation. And there's questions about how do you account for that expenditure of funds? That's what we're focused on, as Jack mentioned, and solely that. This is probably an example where for some entities it's material today, but we see it growing. And there's an absence of accounting guidance today. So there's lots of diversity going on, and it's our attempt to get out ahead of it so that there's an accepted accounting model as it continues to grow and become more material to more entities.
All right, that brings us to slide 133, which is our other activities. The key message here is that we continue to work after a busy fourth quarter. At the end of 24, we continue to work. There has been a couple of exposure drafts, or an exposure draft that's come out, a final ASU of a smaller nature. One is the COD improvements. Now, while that's not a big project, it's important for you all to understand from oversight that anytime we hear about a conflict in our guidance or a little spot where we need to clarify something, this goes back to the story that Rich told about where the codification came from, but it doesn't warrant a project. We keep it on a list, and periodically we take that list. And right now we put out a proposed standard that would have 34 small clarifications. And one of them dates back, as an example, pre the board, and there was a phrase that got left out of the codification that somebody came across, and that we're putting that back in. That's the type of stuff, but it's type of matters that are getting included, but it's important. The other thing I hope you will have concluded by now is that we have a number of projects on the agenda. We certainly have our focus on investors, but we also don't forget all our other stakeholders, and we have a big balance of all the different activities. So before Rich reviews the outstanding agenda, I'll stop and see if you have any further questions for me.
I just have a quick question, Jack. So some of the activities that you've talked about since you started the discussion were around research, and others are standard setting activities.
Mhm.
Can you just describe this? What's the decision-making process from something that's research that you decide we've done the research and you table it, there's nothing further to do, versus we're going to extend the activities and it'll become a priority on the agenda? Can you just kind of walk through how do you transition from one to the next?
Sure. So the first thing we do is research, and sometimes we use what's called an invitation to comment to supplement that research. An invitation to comment, I'll say, hey, here's the issue, and here's 5 or 10 questions about the issue. The staff sends that out. That is not approved by the board and is not a project. The staff sends that out, gathers the information back, they analyze that information, and if the staff believes that a project is then warranted, we'll go to the board and say, summarize the research that's been performed, recommend a project, and recommend a scope using that information. A key item is sometimes people write in letters and ask us to take on projects, and all of those letters get posted to our website, and we as a staff have to take those to the board, and they have to conclude one way or the other on those letters. in a public board meeting. So there's full transparency and we make sure everybody's requests are getting fully considered. Now, once a project's on the agenda, the staff goes off and performs work, and it comes back with important decisions for the board to make. We try to package them up. We don't come every week, and we'll come with a group of decisions. If it's really complicated, maybe we'll come with like the core model, and then we'll build out the rest of the guidance, and then come back to the board, and then make sure they're okay. And we'll talk about transition, and then the like, and then we'll put out a proposal. Proposal is subject to normally 30 to 60 day comment period. Then it can be as short as 15 days. And then from there, get the comments back, we'll analyze those, and then come back to the board with hopefully a proposed final standard. And then once it goes through the final standard, if it's pretty complicated, we have a fatal flaw review process. We'll reach out to a handful of people to make sure it's understandable. And then from that, we'll produce a document, and it'll get updated in the COD the next time around. So.
Yeah, Pratt, probably the key in that is the detailed projects that Jack walked you through were all projects that were on our technical agenda and reached a milestone. They can only be added to the technical agenda if a majority of the board puts them on there. And Jack's absolutely correct. Anyone who sends us an agenda request, we look at and we talk about in a public meeting and make an agenda decision. Once it's on our technical agenda, it can only advance to those milestones with the majority of our board. So that's the exposure draft or a final standard or being removed from the agenda. So every step along those ways. And that includes the codification improvements. So when Jack mentioned that, these 30 small projects, we take changes to the codification very seriously. That goes through our full due process. And that's why, while we bundled those together, because they don't make sense as individual projects, maybe they're more of a housekeeping clarification nature. We still go through the full due process with the board, and every one of those issues is exposed for public comment. Okay. All right. So Jack walked you through a lot of activity, and if you move to slide 134, this summarizes that technical agenda as of February 5th. And one thing you'll notice is there's 14 projects on that agenda, and 12 of those projects have advanced to exposure draft / redeliberations. So when you think about our process, once we issue an exposure draft, we get the input from our stakeholders back, and we as a board redeliberate and we make a decision what to do. And that could be move to a final project, could be to change direction and maybe issue another exposure draft. It could be to remove it from the agenda. But with 12 of our 14 projects reaching that stage, it does leave the question of what's next. And that's why, if you flip to the next page, it's a summary of our research and other projects. That's one of the reasons, and while it's not reflected on here because it was issued at the beginning of January, that we have instituted our agenda outreach process once again. We thought it was very successful the last round that we had. I think we got very favorable input from our stakeholders on participating in that process, and very favorable input from our stakeholders on the progress we've been able to make on our agenda by incorporating that process, and so we're doing it on a recurring basis. What you see here is a roll forward of other projects. So research projects, or those projects that are not on our technical agenda, that gave rise to the 2 invitation to comments that I talked about earlier, one on financial KPIs, one on accounting for intangibles. So again, not on our technical agenda. They haven't been placed there by the board. These are areas where we're getting more information to give our board enough information to make a decision. Is there a project there? PCC projects, Sue will talk about those in a little more detail, but once the PCC moves forward with the project, we make a decision, we add it to our agenda or not. In this case, we've added it to our agenda. EITF projects, same thing. Those effectively come to our board as agenda recommendations with proposed solutions. And in this case, you'll see the one item the EITF was working on, we added to our agenda, and Jack summarized with you a bit about the progress of that. And then the final are the post-implementation review projects. You heard from Joel about some that the GASB has going on. This talks about the 3 that we had going on in the beginning of the quarter. We've already reviewed with the Oversight Committee the one that we finalized, RevRec. And let me turn it over to Jack, who'll give you an update on the other 2. Jack?
All right. Just a quick summary of the PIR process. It is a three-stage process. Once we issue a standard, we don't forget about it. We support implementation. We keep our ear to the ground. We do some research. We ask questions. We answer questions that are asked of us, and we support implementation. Sometimes on bigger projects, that may mean we make some tweaks via amendments, as we did with regard to leases and CECL and frankly, revenue recognition. Sometimes we have to modify effective dates if we didn't estimate how much effort there was going to go into, or in the case of like leases, people didn't estimate the amount of software updates and how long that would take in order to implement the standard. We support implementation. Stage two, we reflect. And that means going out and getting academic studies. That means going back through all the different implementation activities, doing outreach, issuing surveys and the like. And we say, how do we do? And that's, a couple of years down the road after it's fully implemented. So we can see how it's working, how the standard is working. And then finally, we report. We just reported on revenue recognition. The great thing about that is we are now using that model for our other reporting. We're going to use it as best practice, and also the revenue recognition as a guideline for the amount of due process that we need to do. With that being said, both leases and credit losses are in stage two. Leases is further along, and we're hoping to issue that around the end of 25, and credit losses, we're in the earlier stages of stage two, and we're hoping to issue that around the end of 26. So that's an overview of the credit losses and leases. And on the page, they outline a couple of the details that we've been looking at. I know leases, I think we have 3 outsider groups next week that we are meeting with, or in the next 2 weeks. And every one of them has leases on the materials because I have reviewed those and over the last couple of days. So.
And again, similar to some of the summary you heard from Joel, having gone through the revenue recognition PIR process, I think one of the things that I found very valuable was not only the lessons learned on that standard, but the lessons we can learn for future standard setting. And we've summarized some of those with the committee in the previous meeting. Those are things that we're focused on. And we actually have an opportunity to confirm some of those lessons learned as we're going through leases and credit losses and soon thereafter. But we'll be updating the committee as we go. The final slide is a recurring slide, and it's one that I include really just to as a reminder for all of us. We're a mission-focused organization. We're focused solely on improving financial accounting and reporting. That's it. We do one thing, we do it well, and we're focused on it. Communication is key to what we do in transparency. That means setting the right agenda, doing the right outreach, and hopefully resulting in the right results as part of that. We've been particularly focused on timeliness, recognizing the standards that aren't done don't help anyone, that we do need to accomplish them. Part of that is focusing on scoping them correctly and having a plan and something we can foresee when we're adding projects to our agenda as to how we could accomplish them. Doesn't mean we can't change, but having some idea of where we're going is certainly helpful. We've emphasized in our culture, for us to succeed as standard setters, we need our stakeholders' participation. We need their participation throughout all aspects of it, and it is all of our stakeholders. For standards to be successful, accountants have to be able to apply them, auditors have to be able to audit them, and they have to provide relevant information to investors. Making sure that we have all 3 legs of that stool fully engaged and we're understanding their perspectives and how things work is critical to our success. So with that, Manju, that's what we had for today. I don't know if there were more questions. I know we walked through an awful lot of materials.
See a question here from Tim.
Hi. Hey, Tim.
Hey, Rich. So, well, first, I really want to, from the bottom of my heart, compliment you on this culture of truly listening to all the stakeholders. And I really admire how, you're focused on listening up front to find out what is desired and then listening at the end that did we do it or not? So yeah, you're eliminating the gaps in gap, Jack. Way to go. I like that. The question, and this is maybe kind of an ignorant question, so forgive me if it is, but when we do the outreach, do we get input regarding financial gap for business from governmental entities, the federal government, the states, excluding the regulators? Okay, so not the SEC or whatever, but do states or the feds or legislators ever come to us, hey, you ought to consider this?
So we do a lot of discussions with folks. So we may hear from, for example, state and local government pension authorities who are using financial information to make, sorry. I answered that with the mic off, so let me start over. So we may hear from state and local pensions. So think about a state pension plan. Where they and their investment advisors are using financial information to make investment decisions. We'll try to understand what they're using, what they're not using, and how that involves. So more from an investor input in some regards. We also do spend time with folks, whether it's in Washington or at the state level, when they have questions about our standard setting. And very often it's really for us to provide why we're working on something, the investor input we've heard, the preparer feedback we've heard, how we've made some decision, really educating sometimes on what our standards are doing and what our process is. But we are focused on the people who will use the financials to make capital allocation decisions. And we are focused on the preparers and the auditors who have to prepare and or audit that information. So lots of dialogue. We're always happy to talk to anyone. And sometimes it varies on what the subject is.
Got it. Appreciate that. Thank you.
Sorry. We have a couple of trustees online. Please feel free to chime in if you have questions or comments or raise your hand. Any questions from online trustees for Rich before we move on to the next item? Seeing none, we'll move on. So thank you, Rich, for that report, Rich and Jackson for the report. Our next item is a report from FASB Liaison to the PCC, Sue Cosper. Sue, I'll turn it over to you.
Thanks, Manju. So good afternoon, everyone. It's nice to see everyone here in Norwalk. Our last PCC meeting was held in person on December the 16th and 17th of 2024. Our newest member, Autumn Heineman, was able to join us. Her term begins January 1st, so she was able to observe part of that meeting. The PCC report is in your materials. It begins on page 138. The December agenda and meeting recap also begins on page 196. Overall, maybe as a macro observation, there continues to be good engagement and dialogue among the PCC members and between the PCC members and the board. Let me share a couple of highlights from the December meeting. A large portion of their meeting they spent discussing their agenda priorities. And specifically, they discussed the ED on allowing a practical expedient and accounting policy election when applying CECL to trade receivables and contract assets. Jackson talked about that a little bit earlier. They also discussed the status and feedback from external review of their project on the presentation of conditional retainage and overbillings. Both of these projects will be discussed further by the PCC at their meeting in March. They also had an update on that research being conducted on two other of the PCC agenda priority topics, which includes the outreach and applying the debt modification and extinguishment guidance, as well as activities on the PCC's leasing working group. The PCC also discussed recent activities on a variety of other FASB projects. So maybe just turning to town hall and liaison meetings. Since our last update in November, the PCC has held 2 liaison meetings in January. One is with IMA Small Business Shared Interest Group, and the other is with 2 organizations within the surety industry group. One is the National Association of Surety Bond Producers and the Surety and Fidelity Association of America, mouthful. anyway, sureties are a big component of users of private company financial statements, particularly in the construction industry. The meetings were both very productive. They covered a wide range of topics and were well attended by PCC members. A couple of other things, we hosted a webinar for private companies and included not-for-profits as well in December. We also recently held an orientation for our newly appointed member. And the next PCC meeting, will be held in March. It'll be a virtual meeting. And with that, I'll pause here for any questions you may have.
No questions. Thank you, Sue. Our next item is a report from myself and FAF trustees Rick Reisig and Brian Lewis on our PCC meeting observations from December 16, 17, 2024. Rick, if you don't mind, do you want to kick us off, please?
Thanks, Manju. I did have a couple of notes. As all of you know, I try to take notes on as what we observed during the meeting. One of the things I noticed, and Sue, I don't know if you would concur with this from participating in those all the time, is it seemed like this one, Jerry really hit his stride. I think as you would guess, when you have a new chair come in, and Luis, you mentioned it earlier, I think today in another discussion we were having about a chair comes in and they have their different style. It's their style. And I think Jerry really is feeling pretty comfortable with how he's running the meeting. And a couple of things of note I felt were significant is where he was very proactive in asking the PCC members to provide input. Oftentimes he'll introduce a topic or the staff will introduce a topic, and it might take a while to get the discussion flowing. Maybe one of the PCC members will be brave enough to jump in, and then that opens the floodgates. With one of the conversations that they had, one of the topics, I thought Jerry did a good job of being proactive and asking some of the members who maybe hadn't had a chance to provide feedback to provide their feedback. And I thought that was great because it allowed them to kind of get involved in the conversation where maybe they were just sitting back and listening to the others who might be more forthcoming. I thought it was a great job. Also, I think he did a good job in keeping the PCC on track. One of the comments by one of the members, kind of unbeknownst to them, might have steered the PCC to get out of their lane, if you will. And Jerry was great to say, well, that might be a public company issue rather than a private company issue, and steered them right back and then got the conversation on track again. So he's doing a good job as the chair and again, hitting his stride. Dave Pesch is one of the users. One of the notes I had was did an excellent job of providing a user perspective, particularly on the topic of contract assets and liabilities. And of course, that's very valuable to get the user perspective on a standard that's being discussed. And he did a good job there. One of the things, again, in the conversation with Dave Pesch and the staff, I think it was an excellent conversation they had back and forth where the staff suggested, rather than maybe having a standard change, maybe it would, a staff Q&A on a particular issue might be more warranted. And I thought it was a great exchange because maybe that is what we need. Instead of having a change in the standard, maybe just have staff Q&A where it might give guidance to a practitioner or a user or a preparer on a different issue. And then I did want to shout out, as I usually do with staff who I think did a great job. Katrina Povel, I think, introduced a couple of topics, did a fabulous job in introducing the topics. And then Katie Racino, I don't even know if that's the right pronunciation, but I can't always see who they are. But excellent job in introducing a topic because it was very conversational, which when you're a listener and you're participating, I think it's, you like to see the staff and you can see how they grow in their confidence. And I think talking to some of the FASB folks after, I don't think these people have any need to grow in their confidence. I think they're excellent. They did a great job. So I just wanted to shout out to them. So that's all I have.
Well, thank you, Rick. Brian?
Thank you, Manju, and good afternoon. Let me just echo what Rick stated regarding the level of engagement by all participants and stakeholders in the PCC meeting over the 2 days. Many of the topics the team has discussed here today, a few that stand out to me were the discussions regarding accounting for government grants, disclosure of intangible assets, debt modifications and extinguishments. I think the other process that was observed was a robust discussion regarding the post-implementation review for FASB leases. So you could see that level of engagement at every stage, from the beginning of an idea, concept, something that's on the technical agenda in the process, to topics that have already been implemented, and the post-implementation process and feedback dialogue was there. So I just echo the level of engagement by all members, and that effort to get the diverse perspectives really makes the process through the PCC and the connectivity between the PCC, FASB, and FAF as strong as I've ever seen it.
Thank you, Brian. And I don't want to be redundant a whole lot, but I will be to some extent. My observations, that the meeting was well attended. One of the things, the first item that was covered by the at that meeting was the presentation of the PCC report, and members asked good questions and asked questions regarding the recommendations that were made in that report. The members were very engaged. They had reviewed the materials, whether they were participating virtually or in person. Majority of them were in person, but there were a few on screen. They provided diverse views. On that topic of contract assets and liabilities, there was a lot of back and forth, and the diversity of views went from one end to another end. And Jerry was very diplomatic in guiding the conversation. And at the end, he realized that there wasn't a consensus to move forward on that topic. And he summarized it to the group saying, why don't we come back, ask the staff to come back with some illustrative examples? Because some of them said it would help us if there was an example provided, and the Q&A that Rick talked about. So I thought that was very well handled, and that there was no pressure like we need to act on this today. Just a very delightful learning experience for me. Thank you. So that was our observations of the PCC meeting. And next, I'm going to ask Trustee Beth Pierce for her observations of the GASAC meeting on November 12th. Beth?
Thank you very much, Manju. The GASAC did hold its final meeting of the year on November 12th. By my count, unofficial count, there were 21 members present, as well as GASB members and staff, FAF trustee, and other interested parties. And they weren't shy. Everybody got to talk. What impressed me is that all 21 members participated in a meaningful way in at least one of the subjects, and frankly, more than one in most cases. One member wasn't present, but sent in their comments on all the voluminous materials that they received from Joel and his staff, and that was read into the record. We did receive reports, or they received reports. I used to be on GASAC, so every now and then I'll say we. My apologies. GASAC received reports from the FAF Executive Director, the GASB Chair, the GASB Director of Research and Technical Activities. My point in all this is that many of the stakeholders, the auditors, preparers, users of financial statements are well represented. And moreover, I've checked out the GASB meeting videos on our website, and I encourage people to do that. And I see a relationship between the GASAC member comments, and they're incorporated into the GASB deliberations. At the November meeting, GASB members discussed and provided input on a wide range of topics, including revenue and expense recognition, subsequent events, feedback on the Federal Data Transparency Act, or the FDTA, and feedback on the implementation guide update, which Joel talked about, and also feedback on the research project on gap utilization, which is, as he pointed out, looking at utilization of gap at various governmental entities. One of the highlights of the meeting is the feedback on emerging issue topics. And this is a free form opportunity for members to state what their issues are, what their concerns are, and how are things going, and things that they believe that that GASB should take a look at. And over the years, I have found this, along with the annual prioritization process, which occurs, I believe, in March of every year. It's been increasingly effective way of communicating issues. Two of the issues that came up this past year was this past meeting, were pension expense and disaggregation of that. But the longer discussion was on materiality. And I think, again, as you heard, the GASB chair's discussion, that continues to be something that is on the focus of issues with GASB. Joe Black pointed out at the meeting that this is a uniquely governmental issue as we address transparency with the taxpayers and what the balance is on that. And frankly, the discussion was about balance with the level of transparency and the cost associated with it and the efficiency of using taxpayer dollars. So it was a very interesting and informative discussion. I would say that, as stated earlier, that the GASAC members represent a wide range of stakeholders. Members are engaged in the process. Their input is heard by the GASB, and I think that's important. In Joe's presentation, I was trying to do this on my my smartphone. It doesn't work for doing large volumes of material. But if you look at page 72, Joe's practice, the GASB chair's practice issues projects, subsequent events, and implementation of the guide. You heard that over at FASAC. On the technical project, they talked about voluntary digital financial reports, and that relates back to the FDTA. The pre-agenda, revenue and expense recognition and gap utilization. If that sounds like what GASAC was doing, there's a reason for that, because right after that meeting, when they convene their next meeting, they're incorporating that into the deliberations. So GASAC is an effective vehicle for addressing the continued evolution of government accounting, and I do believe that that's an evolving topic and discipline as we move forward. And they take a look, as does FASB, the cost benefit of the statement, the issue, its implementation, complexity, and transparency. I'm going to address FASAC later, but I found the same positive results there, and I just want to state that for the record. But back to GASB, I want to compliment the staff. Lisa Parker and Greta DeAngelis are fantastic. You cannot beat them in terms of preparation and hard work that they put into this. The papers that the GASB staff put together are detailed, informative, and they are well vetted in the GASB process. With that, I will conclude my report and be happy to answer any questions.
Thank you, Beth, for that comprehensive report. Okay, so now we'll move on to the next report. We had report from trustees Ted Goldthorpe, Brian Lewis, and Beth Pierce on their observation of FASAC. Don't see Ted has not been able to make it today. So Brian, will you please kick it off, and then we can hand it off to Beth for her observations.
Thank you very much. Again, yes, I had the opportunity to attend the FASAC meeting, and I'll take a different approach in my feedback. As a former member of the Standard Setting and Oversight Committee, you want to see the processes work, and you want to see consistency across each and every stakeholder group. And so what I will say is, in this FASAC meeting, you know, the FASB leadership and staff engaged with the committee, and at a high level, post-implementation process was discussed, the emerging issues task force, and how that is a part of the process for establishing a prioritization of issues going forward. The whole interpretive process that FASB goes through at a staff and leadership level with the input of this very engaged group was impressive to see. And as Beth or Trustee Pierce just said, that goes across the board in many of our stakeholder groups. And again, as an oversight process and control, it's been enlightening to see the consistency across the detail, engagement, and execution between both FASAC and GASAC. That concludes my comments.
Thank you, Brian. Beth, do you have anything to add to that?
Just a bit. I think that starting the meeting, they did receive reports from the FASB chair, the SEC, the PCAOB, and the AICPA. Its agenda, as was just mentioned, focused on the EITF. Second, the biggest portion of the meeting was on the breakout target for the day, which was on the key performance indicators. That was a fabulous presentation. The FASAC members stressed the importance of KPIs as a tool for both companies and investors. The members expressed various approaches to this project. It was a lively conversation. And the issues around greater comparability and consistency and using the same definitions, or the ability to use the same definitions, and how do you dig into the look under the hood in terms of how they're developed and what the definitions that are used from company to company or industry to industry. I'm going to go back just to the EITF again, and one of the goals of these changes that they made, and they made changes in was it in 2024, if I have that correct, Rich, but was to jumpstart the standard setting process and make it more efficient. And early into the process at this point in time, but I liked what FASB chair stated, and it said, he said EITF is batting 1,000 at this point. And I thought that was a very good description of where you're at. The members discussed, as I said, various issues, including the mechanics of the agenda, clarification on the types of issues, and communication of decisions. I share, Tim, your comments that you just made on outreach, and I saw the same thing all the way through on the FASAC. I was impressed with the chair's discussion of the various communication processes. Folks that are auditors and preparers have a little different focus than, for instance, investors, and I think you are cognizant of that and make a great effort to find the optimum approaches to outreach, and we saw that in your presentation as well. The third item was the final subject was post-implementation process, or PIRs, and the members discussed the a completed process, which was the revenue, and a little some on the ongoing PIR processes, which are the leases and current expected credit losses. Again, this was seen by all members, and everybody is in on the process and in on the mission as an important quality control tool to evaluate whether the accounting standards are achieving their goals. And that commitment is a long way to making that achieve those goals. I think that evaluating the PIR process is important to continue the standard setting process. In summary, FASAC is making substantial impact on the standard setting process. Its members are established professionals. They're incredible, experts in their respective fields, and clearly dedicated to FASB's mission. They're making substantial impact, and as I say, I continue to be impressed. And to go back to your quote, they're batting 1,000.
Thank you, Brian and Beth, for those reports. Now, and with that, we have now reached the end of our public session for the FAF Standard Setting Process Oversight Committee meeting. Again, many thanks to those of you who tuned in to today's webcast and those who joined us in person here. Please note that the next Oversight Committee public meeting will be held virtually on Friday, May 16, 2025. And thank you and have a great day.